Welcome to Stock Talk with Nico Kritikos. Today, I'm very excited to bring to you my bullish thesis for PayPal stock. This is a stock I just started buying during the last couple of weeks as it's been dropping. If we look here, we can see that the stock has fell from $308 this summer to now it's $209. So I own 18 shares at an average cost of $222. And if this stock stays at around $200 this week, then I'm probably going to buy a couple more shares because I'm just very bullish on this company for the future. So let's get started with this. We are going to use Nico's stock market checklist once again, and this is going to tell us all the things we need to look for to analyze this stock. So first up, is the stock down to over 25%? If we go, we can see, yes, it's dropped over 25%. So this is going to get a yes. Then net income growth over the past 3 years. Here we can see that PayPal has in fact grew its net income as well as its revenue over the past couple of years. So these both get a yes. Now, low forward PE. This one is interesting. This is relative to competitors and historically, because if you go back and look at its forward PE over the past year, we could see that now it's a 37, which seems high compared to a lot of other companies. But if you look at where it's traded at in the past, 63, 53, it's actually a lot cheaper now. And that's why I made this too, just to compare the forward PE ratios of other companies. You can see that some of these other ones that are growing at similar rates, like Amazon's trading at a 55 forward PE. So that's a lot higher. Same thing with Salesforce. Square has a similar business model to PayPal, and they're trading at 106. So we're definitely going to give PayPal a low forward PE here, both historically and relative to competitors. So is the company innovative? Yes, absolutely. By the way, just so you know, they do own, we're going to go through this more in depth in a minute, but PayPal is not just the PayPal app, the platform, it's also Venmo, it's also Honey, and it's also a couple other ones I'm going to show you in a minute. So how's the management team, and is it founder led? Well, it's not founder led. The CEO is Dan Schulman, and he's been the CEO since July of 2015. And I watched a couple interviews with him. He seems okay. He seems like he kind of knows what he's talking about. I normally like really ambitious, energetic CEOs or really visionary CEOs. And I didn't really get that from him too much. But I mean, if you look from the time he's joined the company to now, he's done a fantastic job going from $9 billion of revenue to now $21 billion. So he's definitely been doing a good job. We're going to give that a yes. Return on invested capital. The return on invested capital is 21%, which is fantastic. Beautiful number there. That's a yes. Healthy profit margins. We have gross margins of 47%, a profit margin of 20%. That's really good. Normally you see a lot more. Normally you see if you're comparing the gross margin to the profit margin, it normally gets a lot worse, but they're keeping a lot of that gross margin in there. So that is a good thing. Healthy free cash flow and operating cash flow. If we check here, we can see that their operating cash flow has been, over the years, you can see it's grown pretty steadily, 2.5 billion in 2017, 5.4. Then it dropped a little bit in 2019, and then it went to 5.8, and now it's still growing at 5.9. And keep in mind, that's even with during the pandemic, that's when online transactions were at its peak, and they're still growing even in 2021. But yeah, we can give that we can kind of give that a yes. Industry is growing, absolutely. Mobile transactions and digital payments is definitely a growing industry. If we look at their assets and liabilities, we can see that their current assets, we didn't get it reported for this past quarter, but as of June, current assets sat at 53, current liabilities 41, non-current assets 20, non-current liabilities 11. So both of those get a yes. Balance sheet is looking good. Increasing equity. Over the past couple of years, we can see, yes, it's gone from 15, 16, and now 20. And even more recently, it's at 22. So $22 billion of equity is a good thing. Share buyback or a dividend, it does not pay a dividend. However, if we look at their number of shares, we can see that it's pretty much break even. It hasn't really done much. That one's like, that's a no because they didn't buy back shares, but still, that's not anything. That's not a big deal. Hedge funds, big investors, or insiders buying. Well, insiders have not been doing much. There's a couple sells, nothing too important. Hedge funds, they've been selling a little bit, so there is that. And then big investors, we're not sure about. So technically, that's a no. They're not really buying. Diverse revenue streams, yes, they own multiple different apps. Okay, so now that we've gone through this, we can see that there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So that's a pretty good number. Most companies do not get that many off my list. 14 out of 16. So it is considered a buy from that standpoint. However, we're going to look further into this. So if we look at PayPal companies, we can see that they own, well, it looks like it's not going to tell us there, but their first biggest acquisition is Honey. And this is an extension that you put on your browser, and it pretty much just tells you if you're getting the best deal. So like if we go to Amazon and we go to buy something, let's say we go to buy some shoes, then it'll say it found it cheaper on this other website. And there's a couple different extensions that do this. They're not the only ones. So that's just something to keep in mind, but it's definitely a good thing to have on there. So that's the Honey side of things. Next up, we have, as of this year, as of a couple months ago, PayPal acquired Japan's Pypl for $2.7 billion to crack the buy now, pay later market in Asia. And we saw right around that time, a bunch of other companies were making the same moves. Square bought out a company, Amazon bought out a company. All these companies are really heavily investing into this buy now, pay later. So that's another good sign. If we look at, here's the Venmo side of things. Here's Venmo revenue from 2017 to 2020. It's gone from 160 million to 450 million. Their payment volume has gone from 2.3 billion 7 years ago to last year 159 billion. Crazy. Same thing. Look at the users. 2006 years ago, there was 3 million users on Venmo. As of last year, there's 52 million users. So they've done a great job with that. Venmo has more users than Square's Cash App, but it does not have as much as Zelle, and Zelle is from Chase. So there is that. Next up, we do know that PayPal is involved in crypto. You can trade Bitcoin and Ethereum on there, and so that's another good thing that they're keeping up with. And I know for me personally, whenever I'm on a website or on an app and it asks me to pay for something, I always select PayPal over other things. I like using PayPal as much as possible. I feel like it's safe. A lot of other people feel like it's safe. So it's a really convenient thing to have around. Now, this came out last week, which is also very interesting. We see that PayPal's Venmo strikes a new partnership with Amazon. However, the stock did go down because of earnings outlook that came up short, and that's why the stock has been down. But to me, I mean, look at the past 5 years. This stock has been, from 2020 over the past year or two, it's done phenomenal. And then now, past couple of months, it's really been sinking. And so to me, this looks like a great buying opportunity, because we know all these different companies and brands that this company owns is not going anywhere. PayPal and Venmo is growing so fast. Digital payments aren't going anywhere. And so that's why I'm super bullish on this company. So many things going for it. As you see here, great fundamentals, great financials, the ratios, everything is attractive here. So yeah, I'm probably going to buy a couple more shares. I think anything around this $200 mark is a fantastic deal. Even up to 220, 230, those are all good deals. So yeah, this was my bullish thesis on PayPal stock. Let me know what you think down below.